Hello and welcome. You are watching First Take here on News 9. I am Suyash Maheshwari and with me in the studio as always is Amit Ranjan. Now we have got an action-packed half an hour ahead of us with plenty to cover. But as always, let's start with how the global markets around the world are doing. Amit.
Thank you, Suyash. US markets, S&P 500 and Nasdaq are on their longest winning streak in the last 2 years. That's the good. As of today, yesterday Dow closed in the positive 0.17% moderate. S&P 500 was up 0.28%. Nasdaq composite was up 0.9%. Moving to the European markets, stocks closed in the negative for a second consecutive day and was down 0.16%. Now we move to the Asian markets. Hang Seng is up 0.05% and Nikkei is down 0.65% as we speak.
Alright, so I mean the overall setup is looking constructive. We got a good handover from the US markets. European markets continue to remain under pressure. But I think the Asian markets which opened in the green have kind of trended towards that flat line sort of.
Yes.
I'm also looking at the other cues that we have been tracking, Amit, the big mover overnight was the Brent crude prices. Now Brent crude was currently hovering around the $81 barrel mark. They corrected sharply by about $4 a barrel overnight over concerns that demand, will be hit after there was a mixed set of macroeconomic data coming out from China. Also, the US 10-year bond yields have corrected by about 7 basis points overnight and they are currently at 4.57 sort of levels, but about 50 to 60 points shy of the 5% peak that we saw a couple of weeks back. Dollar index is largely unchanged at around 105.5 sort of levels. Now, on the back of it, Indian markets have also opened on a flattish note, albeit with a positive bias, with the first tick for Nifty coming in at 19,450 mark. Nifty is pretty much holding on to those gains. Nifty is currently above the 20-day moving average and as you can see, it's currently, around the 19,425 sort of levels. Now these are numbers as you can see on your screen are as of 9:30 a.m. this morning. Nifty was up around 0.1% at 19,425 mark, well above its above 19,400 as well as its 20-day moving average. Sensex on the other hand is struggling to break past that 65,000 mark. It opened above it, but it's trading with cut of about 48 points. Now this is as of 9:30 a.m. The mid cap and the small cap space, Amit, continues to outperform. The Nifty mid cap 100 is well above the 40,300 mark. And the Nifty small cap 100 is up almost 1% and has scaled a new all-time high in fact of 13,370 to 80 sort of levels. Volatility index India VIX is up 0.78%. Now this is as of 9:30 a.m. this morning and it's currently at around 11.8 sort of levels. But with that, let's also welcome Brijesh Ail of IDBI Capital Markets. Hi sir, good morning. Very welcome to First Take.
Yeah, morning, Suyash.
Now, sir, Nifty kind of, took a bit of a breather yesterday, but it managed to close above the 20 daily moving average. Even today, it's holding above that. Can we expect more up move from here on, given the kind of recovery that we have seen in the past 7-8 sessions?
Yeah, morning. So exactly, the view is somewhere it's turning bullish. So somewhere in the last week, I believe that there were a possibility Nifty might come close to 18,800 level on the way down, because we were in a larger note. We were seeing the correction and we were talking of a pullback. But then during the last week, when the Nifty gained about 19,200 level, and the way it has taken out that level, it is quite promising that it is going to retrace further on the higher side. So right now, with this extension of the move can be seen till the 50-day moving average, which is somewhere close to 19,600 level. So I strongly believe this level will be seen. So tomorrow, again, there is a weekly expiry for the Nifty, and today is a bank Nifty expiry. So there is a slight pressure which has been seen in the market. But then directionally, if I need to take a directional view, I'm pretty confident that 19,500, 19,600 will be taken out of the Nifty, and gradually 19,800. This should be the level, maybe in next 3-4 days. That should be the level for the Nifty. In the same case with the bank Nifty. So what we were observing for the last so many days, 43,500 was the level from where the Bank Nifty has seen a breakdown. And yesterday, for the very first time after two trading session, it has given a confirmation saying that this level is likely to be taken on a higher side. So Bank Nifty giving a confirmation saying that above 43,500, I think we should be rallying another 1,000 odd points on the higher side. And like again, it's a 3-4 days kind of a view, but
Wow.
definitely the view is positive.
So, I mean, from what I can see, Nifty Bank is above both its 20 DMA and the 200 DMA, and you expect another 1500 sort of move. I mean, the banking pack has only turned positive, I think, in the last couple of sessions or so. It has been a relative outperformer. So, we can expect, Nifty Bank to drive this rally going forward, Brijesh?
Exactly. I'm extremely, I think Bank Nifty, which was underperforming, is likely to start performing. Basically, the stocks like Axis is something which is very positive on chart. Indices Bank is something which is positive. I think barring HDFC Bank, we should not be worrying to any other counters. It looks good on chart. So as and when the Bank Nifty starts moving, there will be momentum in Axis, ICICI to some extent, and the Indices Bank. So these are the three Bank Nifty stocks which I think should rally basically.
Now, Brijesh, the Nifty Small Cap 100, it's been another big outperformer in the recent last couple of sessions or so. In fact, it has been hitting record highs in the last 2 or 3 sessions. Even today, it hit a record high of about 13,383. It's currently just about 10 points shy of that. Given that, even in the face of such uncertainty, such volatility, the mod cap and the, small cap space has not seen a big shakeout. Can we expect this up move to continue?
I think if I do this sector analysis kind of thing, I think the mid cap and small cap are the sector. Maybe this time when the rally comes, large cap might not be that may not contribute that. So I believe small cap and mid cap will be the space where we will see much of the momentum. And sector specific. For example, I think for the last couple of days, pharma is seeing some good amount of buying. So pharma can be one stock or one sector, and then pharma and small and mid cap should be the sectorial area where we need to keep a watch on.
Good morning, Brijesh. From pharma, let me drive your attention to another sector which has been in the news, aviation. Now, Indigo or Interglobe Aviation expects 30 to 40 more aircrafts to be grounded between January and March of next year. With this, the total number of grounded aircrafts after March of 2024 for Indigo will be 70 aircrafts. The stock today is marginally down by 0.84%, but has been an outperformer if we look at the last 5 days, it's up 5.6%, and year to date almost 27%. What's your take on Indigo stock?
Yeah, so I think if we see the daily chart of the Indigo, and I somewhere the structure of the Indigo is quite strong. I'm talking from the weekly and monthly point of view, and exactly yesterday's high, 2600. If that is taken out, then from the charts point of view, it is about to give us some falling trend line breakout. So that whatever the news which we are hearing and what the charts are saying are something entirely different. Whatever the news is coming, I think it's discounted on the charts. And Indigo, irrespective of this, I have a very strong feeling that we are going to see a breakout in the Indigo, and in the coming day, 2700, 2750 should be the target. Again, some positional, it's not a trading, it's kind of a positional kind of a view, but I'm pretty confident that level, that move will be seen in Indigo. So the charts are extremely positive for the Indigo.
Okay, Brijesh, before we let you go, could you give us your top 5 picks for the investors?
Yeah, sure, definitely. So I've taken a few. So it's like, as I said, the pharma is one space which is moving. So I've taken a Sun Pharma. I believe with a stop loss of 1155, close to 201, that should be the trading opportunity which we can see in Sun Pharma. So that's the one pick. Godrej Consumer Product is one stock which has given a good amount of breakout in the last couple of sessions, and now it is correcting. So I believe this correction should be viewed as a buying opportunity with a stop loss of 1010 for the target of 1044. So this is again a trading pick, but this should be the momentum call, which I think one should keep a watch on. Next, the Varun Beverages, the results came, everything looks quite good, very strong on charts. There is a breakout. So this continuation of the breakout in the Varun can be seen towards 1014 level. The stop loss would be 980. After this, I would like to give a focus on the slightly delivery, like a little bit of longer time frame kind of a chart, which is Narayana Hrudayalaya. So we are extremely positive on this counter. This is also our one of our Diwali pick. The immediate target which I can see is 1144 for the Narayana Hrudayalaya, and then in the green ply. So I think again the green ply, the numbers came, the stock is giving a range breakout, and there are quite good delivery volumes which are seen in the green ply. So I think green ply at current level, one should keep have a long position. The stop loss would be 164 and the target would be 195.
All right, that's Brijesh IL for you. Sun Pharma, Varun Beverages, Green Ply among his top picks in the current market. Brijesh, always a pleasure talking to you. Thank you for joining us here on First Pick, sir.
Thank you.
Amit, before we move on, I'm also looking at the sectors, how they are doing this morning. Most of them are in green, but I think the Nifty banking pack and financial services pack is under a bit of a pressure. Not much, it's about flattish, but the kind of move that we have seen in the last 5-6 sessions where Nifty Bank alone is up by about 1400 to 1500 points, turned positive for 2023 overall. It's given that there will be some bit of a mutedness over there or some bit of profit booking. I think it has turned positive. It was flattish this morning, opened in the negative. Nifty Bank is up about 0.05%. Facing some resistance at that 43,800 sort of levels. And by the way, 43,800 was the level after after breaching those levels. It saw a big decline in the October 17 to October 26 fallout. Nifty IT is also doing fairly well this morning. It's up about 0.3% or so. The auto pack, which was under a bit of pressure in the last couple of sessions, has made a big comeback, and it's up about 0.26%. The pharma pack, Amit, has been a clear outperformer in today's trade, as was pointed out by Brijesh. But with that, we also have Kush Bora of kushbora.com joining us. Hi Kush, a very good morning. Always a pleasure talking to you on First Take here.
Hi, good morning guys. Always a pleasure to be here.
So Kush, after hitting that low of 18,837, in the last week of October, Nifty has rallied by about 550 points. Looks like we are heading for a blockbuster close for this Samvat, isn't it?
Well, it certainly would look like, and if I can on a very light note say I told you so. Well, we did speak about it the last time around I was here, and see, my point was the same. I still maintain that 19,200, 19,500 is a congestion zone. We might spend some time here before we sort of make a dash towards 20,000 or maybe again 18,800, depending on which way the range breaks. But for now, we're very clearly in a near-term uptrend. And if you've got to take a trade, it has to be on the long side. But as I said, on the indices, we do see some kind of a pressure, at least for the next week or two, where 19,500, maybe if I can push it a little to, let's say 19,600, the indices might perhaps remain in a range. And it's not a bad thing, because even if the indices are firmly in that range, it'll keep that sentiment high where the stocks can do their own thing, much like what Pat Cummins did yesterday while Glenn Maxwell did what he did, right, what he does best. So that's the kind of partnership that we'd be looking at. I wouldn't mind if the Nifty holds on in 100-point range from here on, while it gives a positive sentiment boost to stocks.
And what about this buoyancy that we are seeing in in the mid cap and the small cap space? Traditionally speaking, historically speaking, broader markets are the first one to correct in the face of volatility. But not this time around. Small cap index is the only index which has, scaled lifetime highs in the past couple of sessions. What's the view there, sir?
So let's just understand why this is happening and why, as the cliche goes, this time it's different. In the last couple of years, let's say, even if I put it like the last 4 or 5 years, there's been a structural change in the economy where a lot of participation has started in equities. Now, even despite that, this kind of participation, the lot of action that happens in a handful of 150 stocks in the Indian markets. They have the bulk of the volumes. But with the equity base, and by that I mean the capital base, the asset under management with the mutual funds, and more and more people getting active in the investment, in the equity investment side of things, there is bound to be some buoyancy, some action in the small cap and mid cap space. And I've said this before also, right here on this show, where a lot of them who invested in large caps over the last 2 to 3 years have actually sort of felt the pain where there was very clear underperformance. I won't be surprised if the small cap and the mid cap rally does continue for the next 5, maybe even 10 years, because the base is growing. We need more and more companies where investors can participate. So I won't be surprised if this trend does sort of continue. Of course, we'll have blips and moments, but otherwise I still see this trend to continue for the next 5 to 10 years.
Any particular sectors that can participate or lead that rally in the next 5 to 10 years, as you mentioned?
Interestingly, and it may not be such a fancy sector, but I think the banks and the NBFCs are perhaps going to lead the way. A lot of other things will of course fall work for them, but also the fact that they're like a proxy play to the consumer story in the India right now, that itself is going to perhaps play out. We're still bullish on autos and auto ancillary as well, and then also the entire real estate universe. So I'm giving you broad lists, but I think these are the couple of themes that we're looking at. We're looking at banks and NBFCs. We're looking at consumption plays, and we're also looking at some real estate plays, even if it is through the home improvement themes. But I think these these sectors, these pockets still have a lot of upside.
Good morning, Kush. You spoke about the banking sector. There's something about a trend that we had observed yesterday. Now, SBI, which posted its results few days back, reduced its provisions by as much as 96%. Then we looked at the trends, whether it is ICICI, HDFC, most of the banks, they are on a trend of reducing their provisions. Do you think they are doing this just to shore up profits, or is there have they become so organized and confident of their background checks and researches that they can afford to take these risks?
Sure. So firstly, just with the caveat that I don't, particularly track these, sectors or, these stocks from a more fundamental lens. I have a more technical view, and then the ones that trade in derivatives, I have a more derivative related view. But from what I, understand, what I've heard is the fact that, these provisions were already quite high, some while ago. And if they are, sort of cutting them back now, it's not such a bad thing. But as I said, I track more from a technical perspective, from a stock momentum perspective, and we've seen that kind of underperformance that's there, in the PSU banks. Now, I also believe the theory that the longer people, sort of avoid or deny the PSU bank rally, the higher it will go. So from my perspective, there is still a lot of room that is left in the PSU bank. Some of them are trading, below their book value, which is also a sign that, there is still room left. And if you're talking about mid caps and small caps rallying, why not PSU banks? They will also find flavor. So some of these names, like, Canara Bank, Bank of Baroda, maybe not just yet, but the likes of PNB, Canara Bank, SBI is obviously the leader of the pack. Some of these names could do well, going forward.
Kush, there's another sector, the power sector. Power Grid posted its results yesterday, pretty good. They beat expectations on revenues when revenues were expected to fall by analysts. They actually posted 1% rise in revenues. Even profits were up. Tata Power is due to post their results today, and it is expected to post profits of growth of up to 35.8% as per analysts year on year. Adani Energy too posted their results recently, and their net profits surged 47%, revenues were up 13%. Power Grid stock is a little down right now, 0.12%, but how do you look at this sector?
Still very bullish because anything that had power attached to its name has actually sort of run up, and for good reason. We were seeing demand pick up and a lot of structural other changes also. So from my perspective, there is still a lot of steam left. It's just that we'll have to be very specific around the power sector. So the likes of PFC, REC, they've started doing well after a very long time. NTPC also has started doing well after a very long time. So these are multi-year breakouts that we're looking at. And given how things are, and assuming that things will continue to be the same going forward, economy wise, governance wise, I think these rallies are still at a nascent stage. It's not a bad idea to write some of these names. Tata Power sort of has been consolidating, while at the likes of PFC, REC, and NTPC have actually sort of run up quite a bit. So from my perspective, be in this space, not a bad idea to participate. Although if because of the momentum, someone's a little cautious on this. Not a bad idea. Keep your allocations low, but still a good idea to participate in some of these names.
Kush, now I'll drive your attention to a sector or a space which has astounded almost everybody. That's the new age technology space. Now, we were looking at the returns on the stocks. 5 out of 6 stocks that we have on our list today had showed negative performance in the last fiscal, and all of them are in the positive. The most glaring example is Zomato, which has experienced gains this year to date of 137.84%, and it is now in profits as well. All of these stocks basically displayed robust sales growth in contrast to the previous year. The latest entrance, of course, to the pack is Honasa Consumer or Mama Earth, and the stock is up 4.1% today. I'll just take a few names. Car Trade was down in the negative 33% last year. It is up 87.07% year to date. Nykaa was minus 56, is up 20. Paytm was minus 21, is up 38. Policy Bazaar minus 8 is up 11.83. Paytm was the only one that was in the positive last year also, but it's much more. Startups basically have been subject to a lot of criticisms that they look at their valuations and they don't look at their bottom lines and unit economics. But that seems to be changing. Do you think it is time that investors start looking at these new age tech stocks more seriously? And would you recommend any?
Sure. So let's just understand why this happened, right? I mean, if you're sticking to the cricket parlance, see, it's one thing when you play in the domestic league, but when you come to the international arena, the game's very different. It was a different story when they were playing the growth, the growth story or the growth card, when the PEs were investing and they weren't listed. But once you get listed into the markets and, you still believe that, everyone's going to buy into that, growth story when you keep burning cash. I don't think, market is going to do that. And that's exactly what we saw when some of these names listed and, the performance after the listing. That could have been a story that played out well with the PEs, not with the, investors in the equity market. And the kind of shift that we saw in the businesses in some of these names is what is driving, the growth that you just mentioned. Also, let's not forget the fact that, Paytm, Policy Bazaar, Zomato in particular had actually fallen quite a lot from their, listing prices or their issue prices. And hence, there was some value which was already there on the table, after those falls. So I do see a lot of these names, doing well going forward as well. And our top picks right now are Zomato and Paytm, purely from the fact that, the business shift is there and the performance is also reflected in the price. It could be that, the stocks might see a bit of a dip, and only because of technical reasons that they've, rallied quite a lot. And again, they've come to a price where, at least Zomato, 120 to 130 was the zone where a lot of, buying had happened. So you could see some selling pressure coming around this time around, and people want to exit who've been holding on for a very long time. But other than that, once this dip settles in or once these, key levels are taken out, I think Zomato would continue to, rise from here. Paytm also. Also, let's look at the stickiness, right? I mean, these businesses have a very obvious and very apparent, usage. I mean, you and I, use a lot of these businesses. So that's not going away anytime soon. And from the price point also, as I said, that corrected a lot and we're seeing an up move from here on. So Zomato and Paytm, these remain our top 2 picks. Policy Bazaar, maybe, I don't see a bit of, a big movement here. Nykaa, not on our radar for now. So So as I said, Zomato and Paytm, these two would be our top picks, and we do see these stocks performing well going forward.
Kush, now since we are talking about new age companies, one got listed yesterday, Hunasa, the Hunasa Consumer, the parent company of Mamaearth. The stock had a muted listing, opened about 2% higher. Even today, I am looking at the prices. Currently, it's about more than 1.5% lower. I mean, what is your overall opinion on the stock per se? Because, you know, at least to me, you know, with a portion, 80% portion of OFS, it looks like the IPO was more about giving that big exit to the investors than, you know, really unlocking the value for the company and the shareholders.
So once again, you know, since I don't track these very closely from a fundamental standpoint, I'll come at it from a very layman perspective. You know, me or, you know, not too many people that I know in my circle are either users of, you know, the brand or investors in the company. And that's like a dipstick, you know, survey and, you know, a measure for me as to whether I should be parking my money in this or not. And that certainly for me right now seems like a no. So that's all I can tell you from a technical standpoint. There isn't enough data from me to, you know, tell you what kind of price movements to expect.
All right, that's the view from Kush Bora. Kush, always a pleasure talking to you, sir. Thank you for joining us here on First Take.
Likewise, have a great day ahead. Bye.
Let's also look at the markets, you know, how they are doing. I think Nifty is still holding above that 19,400 sort of levels, as you can see on your screen. It's actually above the morning levels that we were seeing, still holding above that 20-day moving average. That is Nifty for you, up about 0.12% at 19,430 levels. Now, these levels are as of 10:10 a.m. this morning. Sensex has also, you know, moved ahead and has actually overtaken the 65,000 mark. It's currently trading just 2 points above those levels, up about 0.09%. The mid-cap 100 space, Amit, is also doing fairly well. It's holding above the 40,300 sort of levels. As of 10:10 a.m., it was up 0.79% at 40,367 mark. The small cap index, again, it has been a relative outperformer. It hit a new record high of 13,383 mark today, trading about 20 points short of it, up 0.93% at 13,365 sort of mark. Volatility is pretty much where it was at in the morning trade, up about 0.31% at 11.23 marks. Let's also look at how the sectors are doing. The banking space still has seen a bit of a correction over there. Now, the numbers you see on your screen are as of 9:30 a.m. The numbers have revised since then, and Bank Nifty has fallen below 43,700 mark, and it's currently hovering around the 43,650 sort of levels. The auto pack has extended its run. It's up about 0.5% at 16,217 mark. Financial services and the private banking space continues to remain under pressure. Only these indices are in the red. The PSU bank in the financial space is an outperformer today. It's up about 0.44% currently at 10:14 a.m. this morning. The realty pack has scaled a new 15-year high. It's up about 0.84% as we speak, you know, slowly inching towards that 650 mark. But with that, we have completely run out of time on this edition of First Take. Keep watching News 9.